Hello investors and traders, today I'll speak about S&P 500 technical analysis using Elliott Waves. So let's go through my previous projection so we can see that at the beginning of September I gave you a projection that it will be, in my mind of course it's the fifth wave, it's expanding leading diagonal. So here we have the first, the second, let's check it a little bit closer, the second, the third. Yeah, in my mind the third wave is finished. Now it was a little bounce force, and now I'm thinking that we're going to finish the fifth wave, the fifth of fifths. So my target is 34, 340 actually. So in my mind there is a potential, nice potential to see the index a little bit down, about 6%. So then wave A, I'm expecting ABC move here, so then the wave A will finish here. Then it may be a bounce till 4,000, but then of course I'm expecting to see index much lower. It will be the wave C. But firstly, of course, we should see the finishing of this figure of expanding leading diagonal. Of course, here we had the first, the second, the third, the fourth, and now it's going very clearly and very nice. And here, of course, my projection and my drawing will help you somehow when you're trading and you're investing. So now I'm not heavily buying stocks. I'm expecting to see start of wave C, the bounce here, maybe then the index will be lower. It most probably will be the end of this year, but then maybe at the levels of 320, then I think it's very nice levels. At least start to buy stocks like Facebook, Apple, Google, Amazon, the Fangman one. There are a lot of stocks that now the next Netflix now down about 50-60% from the beginning of the year. So now it's already very nice values and very nice prices. If we will check the Nasdaq, the index of IT companies, as I told you before, so here we have a head and shoulders, so the neckline is already broken, and most probably if the S&P will go lower, so the next target for Nasdaq, it will be here, this level. So we can see the index itself another 11% down. In this case it will be the levels of the pre-pandemic levels. So in my mind here a very high possibility to see these levels. And let's check the DXY, the index dollar currency. We can see that it already trading very high, trading about high levels of the last weeks. Here we had a range about 90 and 100. So now we broke this range, we got out. So before all the issues with the inflation, with the interest rates hikes by the Fed won't come down. So I think that's still the DXY can be elevated. And another problem of course, it's the increasing US government bond yields. For 2 years it's about 4%. At the beginning of the year it was just look that the yield from the yield itself from the beginning of the year is more than 400%, so it's a lot, it's very significant. So here before the yield also will come down, we won't see any growth in the stock market. As I told you previous, the bond market is bigger, is more clever than the stock market. So before we won't see that the yield will start to fall, that I think in my mind that it's very hard to see the S&P and all the other stocks begin to grow. So in my channel I have a lot of videos about technical analysis, stock analysis, fundamental analysis. So if you like this video, don't forget to subscribe, and see you on the next time. Bye.